Hi friends, myself Subrata Mukherjee and you are viewing my channel Dr. Subrata Mukherjee Distance Learning in Commerce. I would like to request my viewers to subscribe the channel and to see the playlist section of the channel where I have uploaded lectures on accounts, costing, financial management and management accounting. I have prepared this channel for the benefits of students who cannot afford private tuition but can have access to quality education. In this video, I have discussed a problem on consignment account. Gupta of Delhi consigned 1000 tins of oil to Patil of Mumbai. Each tin contains 10 kg of oil costing rupees 24 per kg. Gupta paid rupees 16,000 for freight and insurance. During transit, 25 tins were destroyed by accident and insurance company paid rupees 5,000 to Gupta. Patil sold 8,000 kg of oil at rupees 40 per kg. He incurred expenses rupees 1,000 on godown rent, rupees 1,600 on advertisement and rupees 2,000 for cartage and unloading. Patil charged 6% ordinary commission and 2% Del Creda commission. Bad debt was rupees 1,000. 150 kg of oil had been lost at the time of unloading, which was treated as normal loss. So, consignment to Mumbai account and Patil account in the books of Gupta. I have prepared the structure of the accounts that I have to prepare. Here, first of all, I need to prepare the consignment to Mumbai account and Patil account in the books of consigner, and the consigner is Mr. Gupta. So I have prepared in the books of Gupta consignment to Mumbai account and Patil account. These are the two accounts that I have to prepare, and while preparing these two accounts, I need to calculate the value of abnormal loss or the value of stock. So those things I will be doing in the workings. Now, what is the first line given in the question? That Gupta of Delhi consigned 1,000 tins of oil to Patil of Mumbai, and each tin contains 10 kg of oil. So total quantity, or that is the quantity of oil which was sent to Mumbai is 1010 into multiplied by 10 kg, means 10,000 kg of oils was consigned to Mumbai, to consignee Mr. Patil. So Patil is the consignee and Mr. Gupta is the consigner. So I need to write here to goods sent on consignment. So to goods sent on consignment account. So here you need to write 2,40,000. To goods sent on consignment, rupees 2,40,000. How I arrive at this figure? So 1,000 tins were consigned and each tin contains 10 kg of oil multiplied by 24. This is the cost of 1 kg of oil. So 2,40,000. Now Gupta paid rupees 16,000 for freight and insurance. So your journal entry will be consignment to Mumbai account, debit to bank account. And the reason you need to write here is for freight and insurance. So I am writing here freight and insurance. And what is the amount that has been paid? This is 16,000. Right? Next is, during transit, 25 tins were destroyed by an accident and insurance company claimed rupees 5,000. So here I will do a small working for the calculation of, so here I am writing in working note number 1. So here I am doing a small working for valuation of abnormal loss. So cost of 25 tin you need to calculate, which has been destroyed by an accident. So during transit. So there were 25 tins and each tin contains 10 kg of oil and 1 kg of oil costs 24 rupees. So what is the cost of the quantity that was destroyed due to an accident? So 25 into 10 into 24 is 6,000 rupees. So this is the cost of 25 tin, and you need to add the proportionate expenses of consigner or Mr. Gupta, expenses of Gupta, who is the consigner. So Mr. Gupta has incurred rupees 8,000 towards freight and insurance, and for 10,000 kg of oil, right? So what is the quantity of oil that was destroyed due to an accident? So this is 250 kg. So 25 tins into 10, this is 250 kg. So this cost is rupees 400. So total loss due to accident is 6,400. Now less insurance claim admitted, insurance claim admitted is rupees 5,000. So actual loss is 1,400. So here you need to write like this: by bank account, that is insurance claim which was settled, rupees 5,000, and by profit and loss account, that is loss due to accident. So this loss is 1,400. Now goods were received by Mr. Patil, who is the consignee. He incurred the following expenses. So here I am writing consignment to Mumbai account, debit to Patil account. So what are the expenses he has incurred? Number one is the godown rent, which is rupees 1,000. Next is advertisement, and the amount incurred is 1,600. Next is cartage and unloading. So this is rupees 2,000. So total amount paid by Mr. Patil is rupees 4,600. Now you can write here in Mr. Patil account as by consignment account or consignment to Mumbai account. So this is 4,600. Now Mr. Patil sold 8,000 kg of oil. So here I am writing by Mr. Patil account. So this is the sale proceeds. So 8,000 kg of oil was sold for rupees 40 per kg. So this will be rupees 3,20,000. Now Mr. Patil charged 6% ordinary commission and 2% del creditor commission. So before writing commission, let me write here in Patil account to consignment to Mumbai account 3,20,000, and then I am writing in consignment account to Patil account, this is ordinary commission. So this is 6% of rupees, or you can write here ordinary commission, 6% of 3,20,000. So this is rupees 19,200. And del creditor commission. So del creditor commission is given to the agent or the consignee if at all there is any bad debt incurred on the sale made by consignee, then the bad debt loss will be borne by the consignee. Here in this problem you can see that there was a bad debt loss on sales if made by Mr. Patil. So that bad debt loss will be borne by the consignee, and consignor need not have to incur or to borne that expense. So that is the reason why this del creditor commission is given to the consignee. So 6% is the ordinary commission. So 3,20,000 into 6% means 19,200, and del creditor commission is 2%. Del creditor commission is 2% of 3,20,000 is 6,400. So total commission charged by consignee is rupees 25,600. Now we will calculate the valuation of closing stock which was lying with Mr. Patil. So there was a normal loss which is 150 kg, which is given in your question that 150 kg of oil had been lost at the time of unloading and which was treated as normal loss. So let me show you how to value this this closing stock which is lying with Mr. Patil. Here I have written the value of stock on consignment. So how the valuation of closing stock on consignment will be calculated. So this is equal to cost of goods consigned into quantity of unsold stock divided by actual quantity available for sale. For the normal loss, nothing will be recorded in the accounts. The valuation of closing stock will be done to consider the amount of normal loss. So how this closing stock on consignment is valued, I have written. So this is the cost of goods consigned into quantity of unsold stock divided by actual quantity available for sale. Now let me explain this equation one by one. So first I will calculate the actual quantity which is available for sale. Now, so the first line I am writing that quantity of goods consigned. First you need to write quantity of goods consigned. So this is 10,000 kg. I have already shown you that 1,000 tin were sent and each tin contains 10 kg. So here I am writing 1,000 tin into 10 kg per tin. So per tin. So total quantity of goods consigned is rupees 10,000 kg. Now less loss in transit. So what is the quantity of loss which was incurred during transit? So 25 tins into 10. So this is 250 kg of oil was lost during transit. So this is 9,750 kg. Now less normal loss. Normal loss is 150 kg. So 9,600 kg is available for sale. So this is the quantity which is available for sale. Quantity of goods available for sale. So one parameter I have found out. So actual quantity available for sale is 9,600 less what is the quantity of sale? So sale is 8,000 kg. So 8,000 kg of oil was sold by Mr. Patil, who is the consignee. So what is the quantity of unsold stock? So quantity of unsold stock is 1,600 kg. So this is the second parameter I found out. So 9,600 kg is the actual quantity available for sale and quantity of unsold stock is 1,600. Now you need to calculate what is the cost of goods consigned. Cost of goods consigned. So cost of goods consigned. So first of all, this is the material, the cost of goods consigned or material cost you can write. Material cost is rupees 2,40,000 that I have already calculated. 1,010 into 10 kg per tin into rupees 24. So this is 2,40,000 and expense incurred by Gupta, who is the consignor. So this is rupees 16,000. Then add non-recurring expense incurred by Patil. So Patil has incurred three expenses. One is go down rent. So go down rent is a recurring expense because you need to pay go down rent every month. Then advertisement is also a recurring expense, but cartage and unloading expense is a non-recurring expense. So here I am writing non-recurring expense incurred by Mr. Patil is rupees 2000. So 2,50,000 value of goods was sent to consignee. So value of goods sent to consignee. But there was a loss due to an accident during transit. So you need to remove this abnormal loss. So value of abnormal loss during transit. So this is rupees 6,400. So 2,51,600 is the cost of goods consigned. So 2,50,000 minus value of abnormal loss during transit. So this is the cost of good consigned, or this is the value of goods which is available for sale. Now you need to calculate the value of closing stock. You need to just put these values in this equation. So value of closing stock is equal to cost of goods consigned, that is 2,51,600 into quantity of unsold stock, that is 1,600, divided by actual quantity available for sale is 9,600. Okay, so here I am writing value of unsold stock. So this is equal to 2,51,600 into 1,600 divided by 9,600. So this is equal to rupees 41,933. So in this account, that is consignment to Mumbai account, I am writing here buy consignment stock. Consignment stock account. So I forgot to write the amount of commission in Patil account. Okay, I will write here. So value of closing stock on consignment is 41,933. So in Patil account, I am writing buy consignment to Mumbai account, the amount of commission. So what is the total amount of commission? 25,600. Here I have shown you. So 25,600. Okay. So this is the consignment to Mumbai account I have completed. So on the credit side, you have by bank insurance claim that was admitted by the insurance company 5,000 rupees. Then the loss due to abnormal loss due to an accident is 1,400. Then the sale proceeds 3,20,000, and the value of the stock or unsold stock is rupees 41,933. And on the debit side, you have goods sent on consignment 2,40,000. Then expense incurred by consignor to bank, that is freight and insurance, 16,000. Then the expenses incurred by the consignee, Mr. Patil. So to Patil account, 4,600, and the commission charged by Mr. Patil is 25,600. So you can find out easily the amount of profit. So you have a total of So you have a total of 3,68,333 on the credit side. So I am writing 3,68,333. So this is profit on consignment. So profit on consignment is 82,133. So you can see here that consignment account, Profit on consignment is 82,133. Now from Patil account, I will try to find out what is the amount which is to be received from Mr. Patil by the consigner, Mr. Gupta. Mr. Patil has received the consignment and he sold the goods for 3,20,000. So this 3,20,000 has to be remitted to the consigner, Mr. Gupta. But out of the sale proceeds of 3,20,000, Mr. Patil has incurred 4,600 the amount of expense and 25,600 is the amount of commission. So this two amount will be retained by Mr. Patil and the rest amount will be sent to Mr. Gupta. And we are preparing the account in the books of Mr. Gupta. So this balancing figure is basically the amount which is receivable from Mr. Patil. So Patil is basically a debtor in the books of Mr. Gupta. So by balance CD, I am writing here 2,89,800. So total of both sides is 3,20,000 and 2,89,800. This is the amount that has to be remitted by Mr. Patil to Mr. Gupta. I would like to request my students to note the problem in your notebook and solve the problem the way I have solved for you here. Thank you. Thanks for watching the lecture.